Welcome to SpeedyPodz, episode 3. Today we're jumping into the really dynamic world of business and AI news based on your sources. We've seen so many headlines flying around suggesting, well, everything from an AI bubble may be bursting to some pretty unlikely company partnerships. So what does this all actually mean for the future of tech and, the economy? Let's try and unpack this a bit.
Indeed. It feels like we're in a really fascinating phase right now, where we're kind of moving past those big, almost fantastical claims about AI, settling into something a bit more grounded, more real. And this shift, it's definitely impacting market sentiment, corporate strategies too. We can connect this to the bigger picture by looking at some recent studies and company moves in the material.
Okay, so kicking things off with AI market sentiment, your sources point to a pretty significant shift. There was an MIT study, right? It found, staggering number, 95% of Gen AI pilots, those initial projects, they failed to make it to production.
95%, that's huge.
It is. And the core problems, things like employee resistance, sometimes just poor quality output from the AI, and resource misallocation, like 70% of budgets apparently going to sales and marketing tools, often with pretty poor ROI.
Yeah, whereas back office automation,
Yep.
the study showed, had the highest return, much more deterministic work.
Exactly.
So this really begs the question, is the AI hype cycle, finally settling down a bit? Sam Altman from OpenAI even hinted at this. He compared the AI craze to the dot-com bubble, though he still stressed AI's long-term importance, of course. He also, interestingly, admitted they kind of screwed up some things with the development or maybe the future rollout of GPT-5. It highlights that gap between expectation and reality.
Yeah, and we're seeing this reflected in company moves, too. Look at Meta. After this massive hiring spree, a blitzkrieg, someone called it, they've now got a hiring freeze in their AI division.
Right. Seems like they're digesting those previous acquisitions, all that talent they grabbed. Weren't there reports of like $100 million offers for OpenAI people?
Exactly. Big money. But now a pause.
What's interesting, though, is experts aren't really calling this a bust. The term seems to be more like a healthy correction. That old narrative of AGI, artificial general intelligence, being just 2 to 3 years away, that seems to be fading.
Yeah, definitely feels less common now.
Instead, there's more recognition of incremental progress.
Yeah.
Evolutionary steps. We're seeing models specialize, right? Like
Yeah.
Anthropic is great for coding, Google's doing interesting things with video. It's not about one single all-knowing AI. And this highlights that difference between, say, probabilistic tasks in sales or marketing, where AI maybe struggles with ROI, versus deterministic tasks like back office stuff, where it really excels.
That makes sense. And it suggests we might be entering that, what they call the trough of disillusionment. It's that phase you see in tech, like with the internet boom, where the initial massive hype kind of meets the practical reality.
Precisely. And this phase often involves a shift towards, well, human AI pairing, using AI as a tool alongside people, and also a move towards small language models, SLMs. These are more focused, leaner AIs for specific tasks. They promise better efficiency, probably lower costs too.
So a maturing understanding, really, moving beyond just the big flashy stuff.
Exactly, focusing on where it actually delivers tangible value.
Okay, and these broader market shifts, we see them playing out in specific company news, too. Intel shares, for instance, they surged after the U.S. government agreed to take, a 10% equity stake? Trying to boost the chip maker?
Yeah, it shows a real strategic national interest in the foundational tech there. Meanwhile, you've got Apple, reportedly in early talks to use Google Gemini for Siri, apparently.
That's fascinating, like frenemies collaborating.
Right, and it suggests Apple might be outsourcing more core AI tech, focusing maybe more on integration.
Interesting strategy. But on the flip side, Intuit, the tax software company, their stock fell. Despite strong earnings, the forecast was a bit, tepid.
Yeah, investors didn't seem too impressed by their AI initiatives, even for customer relations or financial analysis. The market wants proof, it seems.
And Workday shares also dropped. Flat subscription revenue guidance and maybe lingering worries about AI displacement of jobs. This is even though they've been acquiring AI companies like Paradox for AI in recruitment.
It raises a key question, doesn't it? How do companies handle that internal resistance? Even if the tech offers, enormous gains in efficiency, adoption is still a hurdle.
Definitely. And then there's this geopolitical angle with nvidia. Their shares dipped after China reportedly told local tech firms to stop buying their H20 AI chips, cited security concerns, potential backdoors.
Yeah, that move is clearly pushing the use of Chinese-made AI chips instead. And those local chip stocks apparently soared.
Right, adds another layer of complexity. And finally, Palantir's stock also saw a decline. Part of a broader tech and AI sell-off, maybe?
Seems like it.
Hmm?
Just reflect that increased investor caution, maybe more volatility, as the market really starts demanding proven value from AI investments.
Okay, so wrapping this up, what does this all mean for you watching this space? It really feels like we're moving away from that initial broad excitement around generalized AI towards something more practical, more specialized, and often involving humans working with the AI. The market's getting smarter.
Absolutely. And it brings up a critical question for companies, and maybe for you too.
Mm.
In this market that's demanding specific, proven ROI, how do you balance those really ambitious AI visions with the, let's face it, practical realities of actually implementing it and getting people to use it? It feels like a sorting function is happening right now. The focus is shifting hard towards tangible business value. It forces everyone to think much more critically about the real-world applications.
That's definitely a powerful thought to chew on as you think about your own strategies or investments. Thanks for joining us for this look into the latest in business and AI. We'll see you next time.